when you mention cross-border payments, what you typically have a lot of people think about is basically remittance, payouts, through a bank or a money transfer operator like Western Union or MoneyGram. But there's also another perspective which has really evolved and has become dominant in the space as well. And I would like to call it acceptance. So this is more of the perspective of customer to merchant or customer to business payments. So, based on what we see in the current states regarding the cross-border payment landscape in Africa, right from time, it's always been a mix of the traditional banking systems, remittance services, but now we've seen a lot of fintechs, come up with innovative solutions that are also catering to the unique needs of customers in the African market. I think one thing to note is that it's still, quite fragmented because of the different solutions that are not yet, really unified or in one place in terms of interoperability and all that. But a lot has been done, and I would just like to say we are still scratching the surface. And with what we have seen in recent times, we still have a lot to do. And hopefully we get a lot of people on board to be able to push that and make things happen within the cross-border payment space in Africa. I mean, we just go through a list. I think on top of that list, for me, will be currency volatility. I mean, it's not news, seeing how, local currencies within the African space react to the dollar, fluctuations, really depending on both internal and external factors within the countries, majorly economic. So for that, currency volatility is like one of the main challenges facing cross-border payments in Africa today. I mean, this is especially in scenarios where, you're showing a customer the amount they will be debited in their local currency, for example, based on the prevailing exchange rates. And by the time the transaction is actually happening and the customer is getting debited, for example, they are seeing a different amount and they are wondering, it's just because of how volatile, some of the currencies within, the African space are against the dollar. Another thing to note will be regulatory barriers. Because of the way it's fragmented from country to country, there are some countries that are much more advanced in terms of regulatory policies and guidelines that they provide, regarding cross-border payments. Some are more advanced than the others. So, because of how diverse and how conflicting some of these regulations can be across some of the different countries, it's, tends to complicate compliance, within some of the players within the space. Another thing to note will be low financial literacy. Some countries are more advanced than the others, even regarding payment methods. And this even looking at it from, person to merchant payments, for example. While you have the much more tech savvy guys, versatile and, they work comfortable with processing payments with cards, wallets, mobile money in Kenya, for example. You still see some customers that are still predominantly making payments with cash or working with agency banking or mobile money agents. So, lack of awareness and understanding of how digital financial services work, has also hampered, some of the adoption that we have looked forward to for cross-border payments. Another thing will be high processing costs. So, I mean, depending on how the integrations or connections work within some of the partners that, process some of these cross-border payments, you discover that the cost of processing a single transaction, can go up to as high as 10% of even the transaction, amount. So being able to balance that and being able to see how the costs are absorbed is also a big headache. In terms of processing times, transaction processing times have increased, or I would say have improved over time. But one of the major things you will look at is settlement of transactions. That's still a big deal. You still have players that go as far as T plus 15 or T plus 18, T plus 30, as the case may be, just to be able to settle a particular transaction. I think lastly, I'll just touch on, how limited the financial infrastructure in the sub-Saharan African market is. You will notice that, in many rural areas, access to banking and digital payment infrastructure is still minimal. So that's why you have, payment methods like mobile money or solutions like agency banking now, gaining a lot of traction to be able to reach those areas that would otherwise have been, financially excluded. Yeah, I mean, this is interesting. I'm hoping that there's no there's no one working with any of our regulators on the call, but I mean, it's fine. I mean, this is my own verdict. I think regulation has had I mean, a bit of a mixed impact on cross-border payments. Just like I mentioned earlier, regulators working in silos within the different countries, coming up with their own policies and guidelines and, not necessarily taking, cognizance of, what is happening, within some of the other countries. I think what needs to be improved on is the regional regulatory aspects. We've seen some regions, for example, the East African Community, the EAC, they've made some strides in trying to harmonize regulations amongst countries in the East African market. But we still see that the regulatory environment, remains majorly fragmented. Another notable initiative would be what they call the African Continental Free Trade Area, AfCFTA. And I mean, the objective of that, is to improve regulatory consistency, but as we are aware, implementation is still in progress. There are a lot of things around interoperability, rules and guidelines as to processing cross-border transactions. So there's still a lot that needs to be done in that aspect. And we're hoping that we'll see much more traction, especially in the regional space. I think I'd just like to start by saying that, we've seen that cryptocurrency has, posed a potential, to be able to offer faster and cheaper cross-border payment solutions, basically by being able to bypass your traditional banking systems and infrastructure. But one of the main challenges, one of the main things that has restricted this growth is due to regulatory uncertainty. A lot of regulators within the different countries have not even, really been able to come up to state their stance or position regarding incorporating cryptocurrency for cross-border payments. So it's a significant challenge, in this space. And a couple of things, can be done to address this. Like one of the main things will be that, clear regulatory frameworks need to be established, clear guidelines and policies need to be established by the, respective central banks within the African countries on cryptocurrency usage. Another thing that needs to be done is that, the players within this crypto space. Also need to identify the fact that collaboration with regulators is key. And this will help ensure compliance, and, they'll be able to advocate, for supportive policies. Perhaps if in other African countries, just like you have the Ministry of Digital Economy, I guess that can also, help the regulators and government agencies understand better the benefits of cryptocurrency. And based on that, enabling policies and guidelines will be able to drive adoption and growth. Another interesting part will be creating education and awareness, increasing understanding amongst, customers and businesses about the benefits as well as the risks of cryptocurrencies. I'm sure, in recent times, you would have heard about even recently, I think the FBI just was successfully able to secure the release of one of the top executives of Binance in Nigeria, that was in detention based on some of the allegations levied against Binance by the Nigerian government. So, these are some of the things that we have seen that have posed challenges, and those are some of the ways that we feel that, these challenges can be addressed, to promote the role of cryptocurrency in facilitating cross-border payments in Africa and ensuring growth and adoption. We just spoke about, cryptocurrencies. So I think one of the main things, will be blockchain technology, especially because, it promises transparency, security, and efficiency. Which those of us who have been involved in one form of, a blockchain transaction or a cryptocurrency transaction can actually, attest to. So I think blockchain technology would be one of those innovations that, are likely to shape the future. Another interesting one, which is on everybody's lips these days, is artificial intelligence and machine learning. It's already been put to use today, especially, in terms of improving fraud detection and prevention. It's also been able to help, to streamline transaction processes, things that you would call smart routing, for example, being able to detect which processor or which partner would likely be able to process a transaction, successfully, being able to retry, transactions that are failed as a result of, soft declines. Something like an invalid PIN, for example, or, incorrect amount. So we've seen that a lot of companies are now investing in that. And, one of those major things that are likely to shape the future of cross-border payments as well. Another thing will be interoperability, which, it's grown, it's been improved upon in certain regions, but, not essentially across, the sub-Saharan African space. Frameworks or platforms like PAPS, for example, we're hoping that will be able to help push within the mobile money space as well, guaranteeing interoperability, both within country and between different countries, should be able to push that. Another interesting one would be digital currencies. I think in Nigeria, we're like even, one of the pioneers of that with the e-Naira, although that hasn't, taken flight as we expect. But one of the things that I think will happen is that it should be able to provide, stability, and, it should be able to ensure, a regulated, digital payment space if we have countries that can embrace that and, launch that into the market, for businesses and customers alike. This is another very critical one. And of course, we've seen, how mobile money has evolved in the East African markets. I mean, mobile money platforms like M-Pesa by Safaricom have come to, play a crucial role, in being able to extend financial services to underserved populations. Initially, what you would have known mobile money for was the regular, cash in at an agent's location, being able to fund your mobile money wallets, cash out, being able to go and withdraw at an agent location. But that has now evolved, just from those traditional services, to, bill payments, even merchant payments, based on what we see now. In fact, we've even seen some players like M-Pesa, even, launching what they call companion cards, where you can issue like a prepaid card that can be tied to your mobile money wallet, such that you can use that card locally and, internationally to be able to facilitate payments. One interesting story that I would just quickly like to tell regarding mobile money is, I mean, we got a couple of colleagues, where I work at the local to be able to, meet up, in Kenya for a couple of days. And they were on their way to, the safari in Kenya, to be able to go and see wildlife and all that. And, on the way to the safari, the bus that was taking them, had a flat tire. So, while the driver and, some of the operatives of the bus got down, trying to, resolve the flat tire issue, out of nowhere, the locals, who live in like some of the neighboring villages, started making their way to where, the bus broke down, basically marketing some of their, artifacts, some of their different beads, a lot of interesting things. And, a couple of people who don't live in Kenya were interested in buying some of those things. But, for some reason, there was no cash. And, the locals there basically just brought out their phones and said, they could accept payments using M-Pesa. And, luckily, because we had colleagues who are also based in Kenya, they were able to, make payments for some of those things using mobile money. So one of the things that, that pointed out was, that's just within Kenya. And it just shows that we're just, scratching the surface, regarding payment methods like mobile money. So until that's local, for example, is able to, for example, be able to use their mobile money wallet to be able to make a payment to a merchant like Amazon, for example, and have, whatever they've ordered for delivered to them, or until when that's local, has a brother who has traveled to another country and is able to, transfer directly to their mobile money wallet. I think at that point, we will be able to say, we have, really, pushed mobile money to a level where it's now playing a major role in cross-border payments. Based on what we've seen, they facilitate easier and faster cross-border transfers, especially leveraging on, widespread mobile phone usage. You don't necessarily need a smartphone to be able to complete a mobile money payment. Just a feature phone, can help you do that. And it's been able to reach even the most remote areas, just like in the example that I, talked about. it's no news, that remittances are a significant source of income for African households, legally or illegally, if you understand what I mean. Drives, and it's been able to drive demand, for more efficient and effective cross-border payment solutions. The demand for remittance services by customers in the African market, that we have seen over the years has been able to encourage investment in payments infrastructure, and a couple of things that I feel like will be able to maximize the impact of this will be first, lowering costs, reducing the fees that are required, to be able to process these remittance services. This will only be possible when you have competitive solutions from different players in the market, being able to use cost leadership as a way of, having competitive advantage over competing solutions. Another thing will be improving access, expanding mobile money and digital payment networks, making these services available through channels that are more user-friendly, especially via mobile, mobile apps, mobile web, USSD as well. I think another thing will be financial inclusion programs. We've seen that ensuring that, it's a way of ensuring that remittances can contribute to broader financial inclusion. Because it's only customers, that are financially included that will be able to actively take part. Based on currency fluctuations and all that, you've even seen scenarios where it's not, only people that are residents in Nigeria or other African countries that are receiving remittances. We've now started seeing scenarios where, it's even going the other way around, where you have customers in Africa also, facilitating a lot of remittances to the West as well, to people that are in diaspora. I think the advent of, a lot of fintech startups, cost a lot of, how would I say it now? Is it pandemonium in the markets? Especially speaking towards traditional banks. Before now, you'd have traditional banks and fintechs had, basically always seen each other as competitors. But recently we've now seen a lot of traditional banks even establishing, fintech-focused arms, giving them autonomy to be able to come up with competitive solutions that, can be used to compete against the traditional fintechs. One of the things that we know that the fintechs will typically bring are innovative solutions, enhanced and simplified user experience, while from the traditional bank perspective, there's the infrastructure there, and, there's knowledge of, regulatory policies and guidelines and compliance. Some of the ways, with which I think that partnerships can work between the fintechs and the traditional banks will be one, establishing collaborative innovation, being able to develop and build joint solutions that leverage, some of those strengths that I identified earlier between the fintechs and traditional banks. The fintechs being able to rely or leverage on the banks for regulatory oversight, ensuring that there's regulatory compliance, and that way both parties are able to navigate, difficult regulatory landscapes. The last and, an additionally important one will be shared infrastructure. So being able to utilize and leverage on banks' established infrastructure would also be able to guarantee wider reach for the fintechs to be able to push out their innovative solutions and ensure that their services reach far and wide. At the end of the day, we've still seen whatever fintech solution you are building, mobile money, that's money that you're holding on behalf of the customer or sending from one customer to the other. At some point is held, in a bank account temporarily. For a fintech that, transactions should be settled at a particular period, it's still going to be settled to a bank and made available to you, in whatever store value you have or you require it to be made available. Just to add that, I mean, it's not just about paying lip service to partnerships. We need to see activity. We need to see action. Just like you have the, fintechs coming up with innovative solutions, better user experience. They can, partner with the traditional players, the banks and the money transfer operators, leveraging on their existing infrastructure, their knowledge, as well as regulatory oversight, to be able to promote, the way cross-border payments are done in the sub-Saharan African market. So, in a nutshell, that's what I would say about building partnerships with traditional banks. Okay, I mean, taking this from two parts, very big topic. I think from the players in this space, one of the things that will be important, to addressing currency volatility will speak to, hedging strategies, hedging with an edge in front. So basically, being able to hedge against currency volatility, applying substantial FX markups, that give leeway for you to be able to process a transaction still within an acceptable exchange rates, and also being transparent to customers as well, regarding how much they are going to be charged for a particular transaction, especially when they are being charged in, directly in local currency. One of the other things that can help address will be diversification, being able to offer multiple currency options to be able to spread risk, both for the players in the industry as well as the customers. One of the important things for the regulators, will be, I mean, both regulators and the players alike, central bank digital currencies, which will be able to ensure stability, with currencies. I think another interesting one would be stable coins. I think stable coins would also, be able to ensure stability as well. And potentially be able to address currency volatility. It's a very stubborn one, and the minute you think a strategy or a framework that you have established is working, next minute something happens and everything changes, and you're now left with chasing shadows as to how you can address that. So those are the things that I feel that can be used to address currency volatility in the sub-Saharan African markets, regarding cross-border payments. Off the top of my head, educational campaigns, being able to use or leverage on the different forms of media that are available, to the different players in the market to be able to educate customers about digital payments. All the way from radio, TV, social media as well. To be able to drive the conversations, to be able to educate, existing and potential customers about financial literacy so as to drive adoption of digital payment solutions. For the less, tech savvy or digital savvy customers, community engagement, activities is important, working with local leaders or like those tour guides that Isaac mentioned, for example, to be able to promote trust and understanding. For those people, the first thing is even trust, to be able to convince them, then to bring them on board. There's one of my friends that, got invited by an NGO, who visited, some of the communities in Makoko, to be able to talk about embracing digital payments, being able to leverage on other forms of payment methods apart from traditionally cash. And, for him, when we were talking about, some of the insights that they got, it was really clear, they were really appreciative and thankful that, he joined that NGO to be able to come and talk to them about, digital payments, making use of USSD, mobile apps, and all those things. So that's a very key one, especially in the sub-Saharan African markets. I think the last one will be, for players, especially fintechs. And I mean, I think even banks, being able to design and, build user-friendly interfaces with features and functionalities that are intuitive enough, to enable customers be able to embrace and be able to use some of these solutions. You don't want to create anything that is hard or difficult for a customer to be able to, use. That way, it's going to reduce the level of adoption and create a barrier to entry for them. You want a situation where even onboarding is easy, you're collecting the required KYC information, so as not to flout compliance. But by the time they get in, they don't even need to speak to a human being before, they learn how to fund their wallets or, the store of value that is available in the app, or on their profile, and they're able to start using those services seamlessly without any issues. I think, again, one of the main things is affordable solutions. The underserved sector of the markets, quite cost sensitive. So being able to develop low-cost payment options is important, to be able to make cross-border payment solutions more inclusive. The building of an expansion of agent networks, especially to the most remote and rural areas, is important as well. Because time and again, we have seen that is one of the most effective means of reaching, the underserved part of the market. One of the other things that I, just touched on was, being able to partner with NGOs, government agencies, to be able to reach these underserved populations too is really important. Looking for town heads, village heads, or people that these guys look up to in their different communities. Being able to pass the message, about building trusts with these payment solutions, being able to, incentivize and also guide them on using these solutions as well, will definitely, make cross-border payment solutions more inclusive in the underserved space. I think there's the way I would approach this is, I think the first thing was the fact that awareness and adoption, it was limited. In terms of public awareness, I feel like not enough was done, to be able to push this, to the markets. And, the strategy that was even adopted, which would have been, giving it a lot of breakthrough, especially, making it available through the bank's channels, majorly their mobile apps, was good. I think also making it available via USSD would have given it the required traction. Not many Nigerians, knew about what e-Naira was, the benefits, or, how to use it. There were no specific use cases or transaction types that were also, communicated initially to be able to help people drive adoption. I mean, for example, you will see scenarios, some solution providers would, maybe just start with airtime recharge, because they know that within the sub-Saharan African space, you typically have most customers, do simple transactions like airtime recharge at the minimum. Then once they are comfortable with using that payment method for that transaction type, you now start to, roll it out to other transaction types and, use case. I think another thing was, around regulatory and trust issues. I mean, especially in Africa and in a country like Nigeria, people tend, to have trust issues with government initiatives. There's a general distrust, and based on past experiences with some, policies and guidelines, from government agencies. I think that's another thing that contributed. So people were not sure, how it was supposed to work, whether government was now going to start tracking their spending and all that. So, I guess that's part of the reasons why it didn't, really take off. I think the dominance of cash as well within the Nigerian market would have also contributed to it. People were wondering why, I have cash with me. What's the difference between putting it in e-Naira or the money that is already existing in my bank account? What are the advantages of having my money in e-Naira as opposed to some of those other stores of value? So I think that's also affected. Also, I think integration with existing infrastructure with the other players in the market, apart from banks, was also there, being able to make the, APIs for e-Naira available to some of the players in the market who are interested, in integrating APIs and making them available, making e-Naira available within their respective solutions was also a challenge. I think that also stakeholder involvement, did not go as expected. Merchant adoption as well did not pan out as was expected, because I think that was like the major use case, being able to drive merchant adoption, person to merchant payments. I think that was one of the major use cases that was being pushed, but it wasn't well adopted because, I mean, for merchants that are already used to accepting payments via cash, via transfers, or POS or online, channels, it was also difficult to sell it to them and to be able to push it. So I guess that, some of the practical steps, that the regulator could have employed to, push it better, would have been, aggressive at the public awareness campaigns, improved, user experience regarding some of the channels within which e-Naira was being pushed out, building trust very important. Adequate stakeholder engagement, clarity from the regulator around what the use cases for e-Naira are and benefits. Then, of course, also incentivizing people for adoption. So, I mean, we've seen some government-initiated promos, especially, I think the one with the FX, I can't remember what it was now, but I think getting 500 Naira for every dollar that was coming in, so things around, incentivizing you to fund your e-Naira and being able to get, double of what you have, or being able to get discounts at merchants, touch points would have, been able to drive the adoption of the e-Naira. I mean, what I would say is, cross-border payments in the sub-Saharan Africa space, it's really on the verge of transformation. We've seen that it's, right now majorly being driven by fintech innovation, mobile money adoption and, regulatory policies and guidelines. I'm convinced that, to be able to fully realize these potentials that we have highlighted, stakeholders, players in the market, regulators, governments, must be ready and willing to collaborate to be able to address some of these challenges that, we had earlier stated. High cost of processing, regulatory fragmentation, and financial literacy. I believe that by leveraging technology and being able to foster inclusive growth, I mean, Africa can build a more efficient and accessible cross-border payments ecosystem. Thank you.